Everyone, this is Patterson, commercial real estate broker here in Southern California. And one of the questions we get is, why is there such a price gap between where buyers can purchase something and where sellers are willing to sell it? Really, it comes down to the interest rates that have increased since 2022. So back in April of 2022, we had 11 consecutive rate hikes, taking interest rates from maybe 3.5% to 7%. So that has a direct impact on the bottom line for an investor. And most of these groups that are investing, they have either limited partners that are investing with them, and they have a set return that they need to get to those investors. And that makes deals not pencil out like they used to. So for example, on a $20 million property, regardless of what the asset is, whether it's hotels, multifamily, industrial, retail, and say the buyer was going to place 50% debt on it, so they're going to finance $10 million of that $20 million deal. And if they had an interest-only loan a couple years ago, maybe at 4%, that means they'd be paying about $400,000 a year for the debt service. Now today, if they have to get a loan at 7%, that debt service is going to be $700,000 a year. So the difference of $700,000 a year versus $400,000 is $300,000, and that cuts into their bottom line. So that directly reduces their NOI by $300,000. And $300,000 they capitalized at 6% is about $5 million. $5 million off of that $20 million would mean that they can now offer $15 million on what a couple years ago would have been a $20 million deal. And again, that's a difference of about 25%. And that's really what we see in a lot of the asset classes, that price discrepancy of 15 to 20%. Sometimes it's down to 10%, sometimes it's up to 30. I'm in another escrow right now on a retail site that originally they wanted $8 million for. We're under contract in the low $5 millions, basically a 30% difference in price. And that's what it took to actually get the deal done and get everything under contract. So that's really what's at the crux of why there's this price dislocation. On the investor side, they have other limited partners, investors they have to give a specific return to. And when they run their analysis, because of this increase in the debt service costs, the higher interest rates, they can only offer 10, 15, 20% less than what they could have offered a couple of years ago. So that's the answer to that. Let me know if you have any other questions. Happy to answer them. Have a great day. Bye.